Don't time the market. Don't try to get all in or get all out based on what the news is doing or what the corporate valuations are doing. Stay invested through all market times, but look for opportunities when companies are particularly on sale. Well, good morning and welcome to Life in the Markets. My name is Tim Russell, and today is August 18th, 2025. It seems maybe a little bit redundant, but every single week we're talking about the same thing. Markets generally positive. Markets are moving in the right direction. Overall, everything is fine. To kind of put a bow on that, what's interesting about this past week is that smaller companies, as measured by the Russell 2000, actually outperformed the rest of the stock market indices. So the Russell 2000 was up about 2.5%, whereas the S&P 500 was up just under 1%, 0.9% over the last 5 days. The NASDAQ, the tech-heavy NASDAQ, was up a mere 0.3%, or 1/3%. Oil and gold were both down this week. They were up last week, down this one. We're seeing that gold ended up dropping about 1.9%, and oil was down about 0.9%, just under 1%. And it's also interesting, Bitcoin, if you tend to follow those things, Bitcoin was down 2% last week. It was off just about 2%. Well, we're coming right to the end of earnings season. There are a number of very interesting reports yet to be released, but what's so fascinating about this particular season is that the percentage or the amount of companies providing good news that are beating their revenue expectations, beating their earnings expectations, single beats or double beats, is over 90% so far. It's an enormously positive earnings quarter for the vast majority of companies in the stock market, which is a very good thing. This week, we're going to be looking at Walmart, Target, Home Depot, and Lowe's, just to name a few, who will be releasing earnings. So in these earnings, we may get a glimpse into the health of the American consumer. It may tell us that. It may also tell us the impact of tariffs, and we'll learn a little bit more here, possibly about the overall market. There's another interesting earnings report. Usually the reports in the stock market are American companies, but there are a few international companies in the overall market. One of them is one called Alibaba. Alibaba is a Chinese-owned Asian well, it's kind of like a mega app. They do lots of things, but they're like an Amazon for the Asian world. So we may actually be able to get a glimpse, if we trust their numbers, get a glimpse into the health of the Asian, specifically the Chinese economy through what we see with Alibaba. So that's something I'll, with a little bit of curiosity, be following this week. Last week, if we kind of turn back the clock and we looked at what was actually driving the markets, I made a throwaway comment last week. I said, I don't think there's a lot of significant earnings things coming up this week. I realized later that day I forgot to do one little piece of my preparation, which is looking at the economic calendar, and I realized that there was a CPI print that came out last week that was enormously important. Now, CPI is the Consumer Price Index, and what that measures is inflation, how expensive it is to live today compared to a month ago or a year ago, and then we can, look back historically and see over time how have prices changed. Well, the CPI report came back hotter than expected. That means inflation is higher than what analysts were predicting. Essentially, over the past 12 months, inflation has moved up to 2.7%. Now, that is not by any stretch of the imagination a bad number. 2.7% is, historically speaking, fine. It's completely fine. And yet, given the prior weeks, now we're going back 2 weeks, going back the prior week's jobs number with the CPI coming in where it is, people are now saying, hey, this is getting serious. Maybe tariffs are starting to have its effect on our economy. We're starting possibly to see cracks in our overall system. And as inflation heats up, that means there's less discretionary income for consumers to buy and to spend. And if consumers slow down their spending, then our economy is going to start to weaken and company revenues are going to decline and yada, yada, yada. So you would think that this second set of bad news would cause the stock market to have a very difficult day when we had that CPI print come out. And if you thought that, you would be wrong. No. The stock market was encouraged by this negative inflation number. Why was it encouraged? Well, because they said, surely the Federal Reserve will start to decrease interest rates in order to help out the overall economy. And that is exactly what happened. The stock market actually rallied on this news. At this point, we're seeing that there is more than a 92% probability of a quarter point cut in the federal funds rate predicted in September. These numbers change. You could track these numbers throughout the month. The numbers will change based on the whims of the analysts that they're looking at, the economists that they're surveying. But it does seem to be a fairly high degree of probability that the Federal Reserve has enough economic and political cover to go ahead and make some of these adjustments. All right. In other news this week, there was a pretty interesting and significant surprise that came to the markets on Friday. It was released in one of the federal filings that Berkshire Hathaway reports that they deployed $1.6 billion of their cash reserves to purchase shares in United Healthcare. United Healthcare has been a beleaguered health insurer. They have been down 60% since April. That was their low. They were down somewhere south of 60% from their April highs. And a lot of that is for a couple reasons. We've got the increasing costs of healthcare that's hurting their bottom line. We have a Department of Justice investigation about their sales practice or their pricing practice with Medicare, and are they being fair with that, or are they ripping off the American taxpayer? And then we also have all of the backlash from, the very public execution of the CEO of United Healthcare in the streets of Washington. I'm sorry, not Washington. It was New York City, and the concerns that many individuals have about their denying claims and doing all kinds of other. Well, we'll just play it. We'll call it horsing around here with people's lives and their health care. So United Healthcare certainly struggled. And here we are, Berkshire Hathaway, Warren Buffett's company, has invested $1.6 billion into this company. Clearly, he is thinking that there is some kind of value available in a company like United Healthcare. I'm not telling you about this transaction to say, hey, it's a great deal. Warren Buffett thinks it's a great deal. You should buy it too. That's not what I'm saying by any stretch of the imagination. But Warren Buffett is a very smart investor. He's been doing this for a long time, and he sees a deal, he sees a value, and he's putting money to work. Now, all of that being said, he's still keeping his powder dry. That $1.6 billion hardly put a dent in the, get this, $344 billion of cash that they were holding. 1.6 out of 344. It's not really going to make a dent. I tell you all of this because I think there are 3 really interesting investing lessons that you and I can take from what Warren Buffett is doing at this particular phase in the market. So let's draw some lessons here. The first lesson is that when the markets are priced as high as they are right now, the prudent investor is going to do several things. Number 1, the prudent investor is going to be wise to retain a healthy cash position. Remember, Warren Buffett has $344 billion in cash. A very healthy company. And that's a very healthy cash position. He's looking for an opportunity to put that money to work, but at good pricing. He's exercising price discipline. He's not buying NVIDIA right now at its all-time highs. He's buying companies that are on sale that still have economic viability and long-term growth potential. That's lesson number 1. Keep cash reserves and look for opportunities. Lesson number 2 is the wise investor trims his winners. We've seen this over time as Berkshire Hathaway, as one of his top 5 holdings is Apple stock. And Apple stock, if you've followed it over the years, has done enormously well. And he's been able to convert the success of Apple's shares into cash. He's selling some, not all, of his position. He's reducing his position in Apple slightly over time, taking advantage of the high valuations that we see today. So he holds on to his winners for a good long time, but he will also take the opportunity to extract some of the value from these companies to hold cash to look for future opportunities. Remember, Apple still, even after selling a significant amount of Apple stock, Apple is still one of the top 5 holdings in Berkshire Hathaway. Lesson number 3, the wise investor doesn't try to time the markets. Buffett is retaining a lion's share of his stock holdings. He hasn't sold everything at the highs. He knows things are expensive, but he remains an investor. He's holding the companies that he's got high degrees of conviction in. He's not trying to say we're at all-time highs, so I want to put everything in cash and want to wait for the stock market to crash. He maintains a strong investing stance while taking an opportunity to trim some of his winners and look for opportunities to put money in the market when values show up. 3 lessons I think that you and I can apply. Cash at this point is not a bad thing to hold. Look for an opportunity to put that cash into the market at fair valuations, not at all-time highs, not just buying everything at the top. Number 2, we want to trim our winners as things are successful, as we're making money. It's not a bad idea to take some of that cash, lock in that cash at the highs. And then number 3, don't time the market. Don't try to get all in or get all out based on what the news is doing or what the corporate valuations are doing. Stay invested through all market times, but look for opportunities when companies are particularly on sale. I hope those lessons will be helpful for you as they are for me. And then one final thing for us to consider today, just in the area of news, and I've got some really good and encouraging news for us today. So you may have heard last week, Costco announced a significant piece of news. They are no longer going to be offering the abortion pill through their pharmacy available in their stores. This comes after some it's actually been a multi-year engagement with faith-based investing firms like Inspire, the nation's largest Christian ETF provider, the Alliance Defending Freedom, and several other significant faith-based organizations, has been petitioning Costco about their sales practices with the abortion drug. They were able to provide Costco a petition with over 9,000 Costco members who said, I don't want you to be doing this. Please stop offering the abortion pill. They were also able to get a group of investors together with over $56 million worth of Costco shares, petitioning for Costco to end the sales practice. And we're so excited. Costco has stated that they're going to end it, and they're saying that it's because there's been generally weak demand, and it's not that big of a deal, so we don't mind not carrying it. It's a culturally hot button. Now, I'm glad to say that many of our clients are owners of Inspire ETFs and in various of the strategies that we hold here at the Life Financial Group. This is exactly the kind of thing that I want to see more of from our investing partners. Investing is a fundamentally good endeavor. When engaged through a robust Christian worldview, there's no telling what good we can see in the world through engaging with companies and helping to have them end practices which are harmful and engage in things that are going to result in human flourishing. So again, a huge win for Christian investing as it relates to Costco. The battle's not done. I think we still have a significant amount of work to do with CVS. Just listen to this from CVS as it relates to the abortion drug. CVS, this is a quote from a Bloomberg article. It says, CVS said that its mifepristone distributions is in select states where legal, following a completion of a robust certification process. Here's a quote from one of their company executives. We have a long history of supporting the advancement of women's healthcare, and we remain focused on meeting their unique healthcare needs. This includes providing access to safe, legal, and evidence-based reproductive healthcare services, the company said in a statement. We got some work to do with CVS and some of the other organizations out there because I'm sorry, murder is not healthcare. So, my friends, I know there are a lot of reasons why people tend to get down and discouraged about what they see in the world today. Let's rejoice at the win. Take the win. Take the win. Thank the Lord for Costco. Thank the Lord for this particular move. And let's pray that we're able to see more of this come to the markets. On that front, prayer is really important. Can I give you a couple things to ask you to join me in praying for? As Christian investors, would you pray for your investments? Would you pray for the fund managers to make wise investment decisions? Would you pray for the companies that they can profitably impact the world and society for good? Would you pray that these companies in your portfolio would operate with wisdom and tact, that they would do good and do it in good ways? Pray for these companies that their practices would honor God and promote human flourishing. Pray for the team here at the Life Financial Group as we try to have wisdom and discernment as we seek how to come alongside our clients in the stewarding of your wealth. These are such really big and important things. We need God's blessing and favor. God is in control. He is Aslan on a march. He is doing a great thing. Keep on asking God that he would do his good work in this world, even through your investments. As we close out today's episode of The Life in the Markets, let me share one verse of encouragement for you from Luke 6:38. That verse says, in brief, "Give and it will be given to you. With the measure you use, it will be measured back to you. Generosity is such an amazing thing. God promises to us that our generosity will not go unnoticed, that our generosity will not go unrewarded. Give, and it will be given back to you. With the measure that you use, it will be measured back to you. So today, I don't know where you are in your life, where you are in your generosity journey, but I would encourage you. Pray to the Lord of the harvest that he may bless you as you put his wealth back into circulation, and may he use the measure that you use to measure back to you. Until next time, take care. God bless. Be safe out there in the markets.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.